Have you ever thought about investing overseas in international real estate? Does financial analysis differ when you're looking at a foreign property? Today, we'll be discussing that and presenting a case study on investing in Korea. Hello, everyone. Welcome to another conversation with me, Dan Rue, one of the organizers of the Seoul Real Estate Investing Meetup, and also a real estate investing consultant, and Symon He, former private equity analyst and top-rated Udemy instructor.
Hey, everyone.
Symon, how are you?
Good. I'm doing good, Dan. Thanks for having me again.
All right. Well, thanks for taking the time today. I know you're a very busy guy, so we appreciate this. Now, Symon, before we begin this conversation, this is going to be sent out to lots of members of the Seoul Real Estate Investing Meetup. And so if anyone listening is unfamiliar with that group, it's an educational group that I helped start a few years back. And its main purpose is to provide networking and educational forums for our members. We've had all kinds of speakers in the past, government officials talking about gentrification and policies in Korea, actual investors who invest in Korea talking about how they got the lowest prices when they negotiate and how they end up buying properties with very little money down out of their own pocket. And this small group used to be just three of us meeting for coffee. And now, as of last count, has over 800 members. I have two great fellow organizers, Ben Hauser, who I've known for a while. He's also my real estate investing partner, and our new lead organizer, Jean-Luc, who has done a great job of helping our group to expand. And Symon, in case some of our members are not familiar with you, can you give us a quick overview of yourself?
Yeah, sure. Years ago, I was an MBA student at Stanford, and as everybody was part of the Silicon Valley area, everybody was working on a startup. I was working on a startup at that time. When that didn't work out, I decided I wanted to work on something that felt more tangible, that I could see and touch. So I was like, all right, I'm going to get into real estate. And then from there, I fell into real estate private equity, worked in that a few years, worked on all sorts of deals, helping an investment firm look at both residential and commercial deals of size, kind of in the mid-tier, between like $5 to $50 million range.
Wow. Mid-tier, huh? That's quite a mid.
in the when you go institutional, that's considered mid to low tier, actually.
Right.
Once you're in the triple digit millions to billions, then you're looking at the and it's more crowded in that higher tier, actually.
Right.
So got a lot of experience helping them look at all sorts of deals that were, core, kind of finished, turnkey, some deals that to completely ground up, buying land and building from the ground up type of deals, and to conversions. We did all sorts of stuff. So it was really good experience. And I ended up moving back down to SoCal, getting my broker's license, and then focusing on acquisitions, specifically helping primarily high net worth private investors from Asia.
Right.
I'm still doing that, but
wow.
I'm teaching these things that I've learned online over the last couple of years, and have accumulated almost 18,000 students in those
18,000. Wow.
Yeah, and growing. So, happy with that, and really surprised myself. Enjoy the process of teaching and meeting students.
Well, yeah. With that background, I think you are the perfect person to speak to our group. And if you guys want to know more about Symon, I've actually recorded an interview that I did with him a few weeks back, and we go into more detail about how he ended up where he is. And it's a really good interview. I've gotten some really good feedback on it, because we also talk about some of Symon's ninja secrets. Because like myself, I'm a consultant. Symon, hearing all the stuff that he's done, you see where people are at, and you think that somehow they just magically appeared there, or they had some special access to be able to get into that position. But if you kind of listen to the interview, you'll find out that Symon kind of hacked his way to to getting the positions that he's gotten and to where he's at. So it's a real interesting interview, and I encourage anyone who's looking for ways to get into the either private equity or into financial investing, or just the people who like to look outside the box, to go ahead and listen to that interview. So today, I think what we're going to do is we're going to go ahead and present a case study. Do you have that set up by any chance, Symon?
Yeah.
Okay, I'm not seeing anything on my screen. So is it on your screen?
Yep.
Okay. So tell me what I'm looking at right now.
We are looking at the first page.
Okay.
Yeah.
All right. So case study. This is a picture from our last meetup. I wish I knew the photographer's name. I'd like to give him or her credit because he took some beautiful photographs. But this is from our last meetup here. And today what we're going to do is we're going to focus on a case study on an Officetel in Korea. And for those of you who might be scratching your head wondering what in the heck is an Officetel, don't worry. We'll be getting into all of that. So why don't we go ahead and look at the next slide and take a look at the overview. Okay. So where this comes from is a member of our group recently reached out to us and asked for some advice on analyzing an Officetel that she had seen for sale. That picture on the right is a diagram of what an Officetel typically looks like in Korea. And again, we'll be getting into the definition soon. So why don't we go ahead and skip to the next one? Okay, and so this, just to give you guys a background, this isn't a specific case study that we're looking at the returns from one particular investment, but this is more like an introduction to financial analysis because, tell us, Symon, how is it that why is financial analysis so important in the real estate investing process?
Well, when you're investing in real estate, you have to be able to look at the numbers. You got to know how much you're putting in, how much is then coming back out to you, and at what times. And you got to make sure that it's actually worth worth what you're putting in, that you're getting a good return on what you're doing. Ultimately, we want to make investments because we want to make some money from those investments. And if you don't know how to look at the numbers, you're not going to be able to tell the difference between your different opportunities. You're not going to know which one's giving you a better return on your money.
Right. And now I know this sounds like a silly question now, but I remember when I was first learning financial analysis and I was living in Korea at the time, and I kept thinking in the back of my head, well, the stuff I'm learning in the U.S., does it also work in Korea? So, yeah, I mean, financial analysis kind of bridges all countries and languages, wouldn't you say?
Yeah, there's always going to be some regional differences in terms of regulations or how the transactions are done or how you treat taxes maybe. But kind of the core idea of looking at, hey, what are you putting in and what are you getting out and how do you look at that is going to be the same no matter where you're at.
Yeah, and I think that's one of the great things, too, about being able to do financial analysis, because even if you're living in a different country or, no matter where you're at, if you can show someone the numbers, no matter what language they speak, if they're an investor, they'll kind of understand what you're talking about. So in some ways, it helps to bridge language and cultural gaps when it comes to real estate investing.
Yeah.
All right, let's move on to the next one then.
Okay.
So what is an Officetel? Now, if you're living in Seoul or if you're living in Korea, you know the answer to this question. But a lot of people in other countries have never heard of this term. I think it might just be specific to Korea. But an Officetel is basically, it's a studio apartment. It's a big one-room space. It's just a big open space, and sometimes it has a loft. And I believe it has the word office in there because some people also use them as places of business. You can see at the bottom of the slide to the left, there is also a Wikipedia definition of what a Officetel is. And by the way, if you're trying to listen and also read, don't worry, we will provide this PDF as well for people to look at. So you can just kind of listen along and look at the pictures and glance over some of the details here. Symon, have you heard of an Officetel before?
No, I've never heard of it until you presented this case study. I'm like, what is that?
All right, great. All right, let's move on. Oops.
Got it.
Okay. So just as a background to this case study, if you're unsure what to do, what we're gonna do is we're gonna present some numbers, some metrics. We're gonna ask people to kind of look at the returns and figure some stuff out on their own, because this is an educational group and we want to encourage our members to, to learn some new things. Maybe people are familiar with terms like cap rate, IRR, net present value. If you're not, no worries, because I believe, Symon, you'll be reviewing some of the stuff, right?
Yeah.
Okay, great, great. So we're gonna go ahead. We're gonna present some of the numbers in the next slide, I believe, and then we're gonna talk it through and talk about and then kind of ask people to first try to solve some of these questions on their own, and then don't worry if that doesn't work out. Symon has volunteered to give us a lot of the answers. So, all right, why don't we move on?
All right.
All right. So this is information about the property. So what we're looking at is an Officetel, 250 million Korean won, which translates roughly to $250,000. I just always subtract the last three zeros when I'm looking at converting Korean won to dollars. The expected monthly rent is about 900,000 Korean won, so about $900 US dollars. The purchase method is all cash, and length of hold is 5 years. Okay. So from your perspective, Symon, just looking real quickly at a glance, and I know there's a lot of other questions you might have as an investor, but just looking at those first two metrics, what sort of stands out to you?
Yeah, one of the first things is in terms of looking at a rental, and it looks like this is intended as kind of a rental income property.
Yeah, it's a cash. For cash flow, right?
Generally, you want to try to target the gross monthly rents to be at least 1% of the purchase price. Mm-hmm. That gives you more room to work with in terms of returns. So here, I can kind of see just from that metric that the numbers may not look as appealing as an investment.
Right. And when you see the words all cash, when you see that there's no leverage attached, how does that make you start to feel?
The person may be thinking about it very conservatively, or the market itself, there just isn't very accessible, cheap financing. I'm not sure what the Korean market is like. It maybe just culturally people are more used to buying cash. But I think if there is financing available and the person is buying it all cash, then I think they're kind of missing out on an opportunity to get a better return on their money.
Now, one thing I have heard is people say, you know what, I want to buy all cash because I don't want to worry about, these loan payments. I don't want to have that stress at night. What do you think about that argument for purchasing something all cash and not using financing or not using a loan?
Well, I think when you kind of when you do that, you sort of have a false sense of security. You can leverage, you can put some debt on an investment in such a way where it really doesn't put it into additional risk. You're taking on kind of the same market risks. You're taking on the same, rental risks with tenants, with the market already. But actually, you have less capital that's tied up. So you actually have more liquidity when you leverage some cash. Yeah. When you tie more of your cash up in a single investment, you're actually removing your ability to invest in something else when it comes up because you have more of your cash tied up now.
Right. So I guess from a finance perspective, it's how, what are your opportunities that you may be possibly missing out on? Now, I know obviously, depending on what stage of life you're in, you might want to take on less risk and so on and so forth. But I also, as an investor, I tend to think if it's not something you're willing to put leverage on, maybe you don't feel that confident about the investment, or maybe there are some things that you're unsure about.
Yeah. Well, one thing is here, in this case, you're going to have to find really cheap debt, right? Just because the monthly rents is not very high as a percentage of the. So it may be the case that if you take on even 50% of the debt, it won't cover. That's something that's understandable. You don't want to have a cash flowing negative investment.
Right. What about 5 years? Does that seem like a typical hold period?
For rentals, I think 5 years is a good kind of a minimum timeline if you're looking at a kind of a buy and hold. Right. You want to be comfortable with that market for at least 5 years if you're going to buy and hold. And we tend to look at it for 7 to 10 years. If you're
Right.
comfortable with 7 to 10 years, yeah, you may get out in 5 if it really makes sense. But you should be comfortable with it because 3 to 5 years may not be enough, especially if you're relying on more appreciation for your returns. You might not get it.
No, I know. A lot of people will just say, "Well, I'm just going to buy and hold forever," which obviously, in some cases that makes sense. But I think one of the reasons why we put, well, what is one of the reasons that you would say is that you have to think through the length of the hold?
Yeah, you don't. I think on the other end is you don't want to just say I'm going to hold forever until it goes up because, well, if it takes 30 years for you to, make 10, 20%, you missed out on quite a bit because there's
Right.
certainly going to be better opportunities in other markets, right?
Right.
You do want to be revisiting just because you feel comfortable making the investment now for a 7-year horizon doesn't mean you don't look at it a year or two from now.
Right. Right.
Yeah. If you're pleasantly wrong about the market and it goes up quite a bit and it gets really heated and you don't think it can be sustained for your original timeline, then you probably will want to get out early.
Yeah, and I think another thing is it's just it forces you to really think through the investment process. It makes you ask yourself important questions like, do I know what it's going to be worth in 5 years? And if you're having a hard time understanding or answering those questions, that's also a place to investigate and try to discover some more things, I would think, as well.
Yeah.
All right. Well, let's take a look at the next slide then. All right. So in order to complete our financial analysis, there's a few more things we need to know. So at price at sale, 10% more than bought price. That is worded terribly. I used to be an English teacher, so I am ashamed of myself. But basically, that means that we are assuming that we're going to sell for 10% more than what we purchased for. We're going to assume expense and income increase of 3% annually over the length of term of the hold. That means that each year the rents will go up 3%, but each year your expenses will also go up 3%. We're going to assume renovation expenses at purchase of 1.5 million won, or about $1,500. We're going to assume an expense ratio, including vacancy, of about 25%, which means that for every dollar you make, 25 cents of that will be going back towards general maintenance and upkeep.
Vacancy, whatever.
Yeah.
Okay.
Vacancy, meaning that when your apartment is sitting empty, and then selling costs of 6%. Now, one thing I think that a lot of new investors sort of wonder about is this increase in expense and income over time. And I used the 3%. Can you talk a little bit about why 3% is thought by so many people to be kind of a standard, and how people could kind of calculate this? What are some different ways people can think about how to look at that?
That's something that actually it's a good starting point when you're kind of just starting your analysis and you're doing what we're calling a desktop analysis. You're just doing trying to get a quick feel for where this opportunity sits. But especially if you're looking at kind of different markets, this is in Korea versus in the U.S. Generally in the U.S. we use 3% because we kind of try to peg it towards CPI, which is a inflation index, consumer price index that's based on a basket of goods. We're tracking prices year over year to see, on average how much does this basket of goods is going up every year, and we use that as a gauge for, hey, if this basket of goods is going up about 3% a year, we assume that costs of other services or other things are going to go up similarly. And that's, and then, but then we would also assume that, you would be able to charge for that as well and get it back in the rents. So we just use that kind of as a baseline gauge. Now that's going to be different depending on what market you're in, right? Even within, even within the same country, some cities are going to see rents go up way faster, than other expenses, and and then whereas other places rents aren't going up at all. You're gonna have to kind of look at what's going on in that local kind of more local market. And one way to gauge that is looking at things like population movements. If you got more people moving in and renting, you can expect rents to go up probably a little bit faster than the overall increase in terms of cost of living. But,
Right.
You got more people moving out, jobs are leaving.
Right.
There's probably going to be some downward pressures on the rents.
Right. So like if you're doing a property in San Francisco, this probably becomes very important. It might make or break a deal. But if you're looking at a property in the Midwest, it's more or less probably going to be a little bit more consistent over time, right?
Yeah.
Okay. And then renovation expenses. I know you've done your fair share of flipping. $1,500. What does that usually buy you in the sort of the renovation side of things?
It's what you would call putting lipstick on something. You know?
Little cosmetic stuff,
yeah,
right?
it's going to be very cosmetic. So you're looking at like in the States, if you're looking at like kind of a residential home, you may be looking at like a paint job,
Yeah.
Paint job and some work on the front yard just to improve the curb appeal.
Yeah.
But nothing major. You're not going to be doing a bathroom remodeling or anything with the kitchen. You're not going to be fixing any like roofs or foundations.
Track lighting, vaulted
Yeah.
ceilings. That's probably not
Yeah.
going to happen with that budget.
Yeah.
Now, one thing I notice is expense ratios because I look at mobile home parks all day, and mobile home parks are actually thought of among the industry as being very low in terms of expense ratios. And for a really well-operated, smooth-running mobile home park, you might get the expense ratio down to 30%. Typically, though, you're looking at more 40 or 50%. This expense ratio at 25% seems very low in my mind.
Yeah, it could be, and it really depends on kind of the unit. This looks like it's part of a bigger building, so especially if it's kind of new, you may have less repair and maintenance stuff just because it's so much newer over that hold. But if the market's very popular, then your vacancies may be really low. So it's possible, but it does feel like it might be a little bit low. But I think it could work.
Yeah, and one reason why, another thing about this is kind of a discussion point. A little known fact is that in Korea, the expenses might be a little bit lower because you might not have to pay for things like property management. Your real estate agent in Korea might actually take care of that for you. And I remember living in Korea, and one apartment I was in, my thermostat broke. And so when I called the landlord and said, "Hey, my thermostat broke," he's like, "Oh, okay. Well, tell me after you fixed it." And I'm like, "What?" It's like I'm doing infrastructure repairs, and that's how it turned out. I had to actually pay for some of these things, and I've asked different people in Korea, and I've gotten different responses. But it's not always clear cut who's paying for what. And maybe among Koreans, it's a little bit more clearly understood. And maybe there's something legal about that. But that might also be one of the reasons for the expense ratio being a little bit lower. And then selling costs, 6%. That's just typical when it comes to real estate commissions and whatnot. Yep. All right. Why don't we move on?
Okay. I think, let's see. That's okay. Financial analysis.
Yeah. So now you have this information. You have this property that you're looking at. And so let's say that you wanted to run a financial analysis. So the question that I want to kind of pose to the group members or whoever's watching this this presentation is what type of returns would this property generate? So how would you figure out those returns? Based on the information, would you invest in this property? Why or why not? If your answer is yes, why? And if your answer is no, why? And to make this more interesting, this is a question that always challenges me. It's easy to just say, no, I'm not going to invest in this. But then what would change to make this investable for you? So that's like a good question. It helps you to test some of your biases. And what do you think? What do you think of the deal if you're able to get 75% financing at 3.5% over 25 years? It's a little bit more. That one's the leverage question. And if you're really new to financial analysis, maybe all of this will be really difficult for you to do, in which case, don't worry. Like we mentioned earlier, Symon will be talking about how to do all this stuff in a future broadcast. podcast,
Yeah.
whatever it's called.
Yeah. And part of this exercise is, you're looking at a rental. When you think through these questions and you look at what do you need to believe about the market or the property in order for it to make sense, it really allows you to see what are the key drivers of this investment opportunity. What are the levers?
Mm-hmm.
Yeah.
Yeah, and one thing when I'm looking at mobile home park investments, I'm always talking to my group. I said, okay, so we're assuming this, we're assuming this, we're assuming this much in rent increases, we're assuming this much in demand increase. What theory is driving that? So I always think about it in terms of what's the theory behind this or what's the theory behind that. So these are some questions for the group to take a look at for whoever's watching this and see what kind of answers you come up with. Why don't we go ahead and move on to the next slide?
All right.
All right. And here's another one. What else would you like to know? So there's obviously, this is a very abbreviated explanation. There's not a lot of stuff that's been given to you. This is more about an exercise in financial analysis. But Symon, why don't you just talk for a second? And I know we could spend hours on this, but what are some other key pieces of information that you, as an investor, you would like to know?
Yeah, I would really want to know why people would want to live there or work there. Are there jobs near there? Is that in kind of an up and coming area, or are people kind of moving out? Is it what's the trend, right? Of this particular area? Because I don't know anything about this particular market in Korea, but kind of the trend, the local trend of, has it grown over the recent years? Is the trend looking like more and more people are moving to this area, and is it kind of getting more demand, or is it the opposite? That's a really big thing. I think also wanting to know, because this looks like it's part of a bigger building. You may have something where the case where these flats are owned by individual owners and they can kind of make a particular flat look good, but if it's part of a building that's otherwise kind of dilapidated, you might have an issue, right?
Right.
So if it's part of something that requires there's kind of common space, basically, right, and overall appeal to that common area, it really can make a big difference. So you can't just look at that unit by itself. You got to look at where it's enclosed in.
Yeah, that's a good point. I remember in my former Officetel experiences, each unit individually, some would be great, some would be crappy. And it really depended on how much the owner decided to take care of it, as well as, like you say, people who invest or who rent out a space aren't just looking at the units, they're looking at the overall building. So knowing that information would definitely be helpful. So again, while finances are important, we don't want to say that just because the numbers work out, you should invest or not invest. In fact, we're not giving you any kind of financial advice at all. We're just sort of helping to educate you on some things here. Yeah. But there are obviously many, many other factors to take into consideration, finance being one of them.
Yeah, absolutely. We're going to go over quite a few of these things when we use the investment model that I have. That suits perfectly for this. So. We'll cover that in the next session.
All right, let's move on. Now for a little advanced analysis. You don't have to do this. Well, you don't have to do any of this really, but just if if you want to challenge yourself, if you're pretty good with financial analysis, here's an extra challenge. What would you do? How would you figure out if you wanted to get a 15% IRR? Again, if you're unfamiliar with the terminology, forget about it for the moment. We'll be explaining more about this stuff in the next video. And then also, how would you take into consideration exchange rates? And you guys can, like I said, this PDF will be accompanying this video, so you can take a look at that if you felt like geeking out and trying to challenge yourself a little more. All right.
Yeah, that's a great point that you're bringing up. When you're investing overseas in a different market, from some sort of a base currency, and then you're converting it back to your exchanging it back to your home currency, you're going to have to factor in how you think that exchange rate is going to change over the life of the project. Right.
And if you think, now if you're a real big private equity group and and you're making bets on how currency is going to look, and you're also looking at local taxation. You could really get complicated with this with this analysis, because there could be a lot of things that could end up moving the needle one way or the other.
Yep.
All right, let's move along. And okay, here we have Symon. Picture of Symon. In case you are having trouble, don't worry. Help is on the way in the form of another video. We will ask Symon to help us with by giving us a detailed review of this analysis. Symon makes up to $500 an hour for this type of analysis. So we're very, 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 very grateful and thankful that Symon is helping to volunteer his time and do this for free. And if you'd like to learn more about Symon, we do have a interview set up on SoundCloud that you can listen to. I'll probably email this out to people, so I'll also include a link in that email.
Awesome.
And why don't we move on? And there's me. I've started a website, REI Growth Hacker. It's all about how to hack your way into real estate investing. There'll be more information about that on the website, about my story and how I came into being. But if you like the content that we produced here and you're interested in hearing more about things like that, definitely go visit the site and sign up. And I will update you with different information about real estate, and it'll be fun.
Yeah, Dan has so many great ideas for content to cover. It's really interesting use cases and people that he knows that's doing all sorts of interesting deals. So there's gonna be some great content coming there.
Well, thank you. I appreciate that. And also, Symon and I will be putting out a course, a financial analysis course. So if some of the information in here, if it's things that you would like to learn better how to do, if you read some of those questions and you're like, I'm not really sure how to do some of this stuff, and you'd like to sort of strengthen your chops in those areas, be patient, because we are busily working on putting that together for people in the group. Well, I'm sure I can convince Symon to give some sort of special discount to Seoul Real Estate Investing group members. So that's something to also be on the lookout for.
Cool.
All right, last slide. And be sure to join the Seoul Real Estate Investing Meetup, especially if you live in Seoul or Korea and you're interested in real estate investing. We have a lot of great events. Like I said, there's a picture of Ben Hauser, one of the organizers, Jean-Luc, the lead organizer. They do a fantastic job of finding awesome speakers, people that really deliver a lot of value. Our events are mostly educational, meaning that we're just helping. We ask people to come on to speak and educate our members about different aspects of real estate investing. We do have specific investment pitch events as well, but those are clearly marked differently. So if you're interested in hearing about real investment opportunities, you can also attend one of those events as well. All right. Well, Symon, thank you so much. Is there anything else that you wanted to add before I guess we could probably sign off soon, huh?
Yeah, for those who are just starting out, that where analysis may look kind of daunting, it's kind of like learning how to ride a bike. The first few times you might stumble a little bit and it might feel frustrating, but you're definitely going to be able to get it if you stick to it. And then once you stick to it and once you learn it, you never lose it. You'll always have the ability. Every deal that you look at later on, you'll have that background to be able to look at it from a more analytical perspective and be able to look at it, and compare it with other opportunities so you can know whether it's a good deal for you or not.
Absolutely. And, speaking from practical experience, if you know how to run the numbers on things and do a little bit of financial analysis, you can definitely command a much bigger salary, a much bigger consulting fee. Things really start to open up. And as Symon says, hey, that sounds like a game. As Symon said, don't lose hope if some of this stuff is overwhelming or confusing, because believe me, I knew nothing when I started doing this a few years back, and I didn't know what a cap rate was. I didn't know how to do the first step of analysis. And it's, everyone starts in the same boat. But once you know it, it's like Symon said, it's like riding a bike. Once you know it, you'll never forget it. And you can always use it. And you can apply it to any market. It's a great skill to have.
Yep.
All right. Well, I guess that's it for today. Thank you, everyone, for tuning in. And, be sure to look out for part 2 of this case study where Symon will be telling us more information about how to actually do the case study. He'll actually have his screen up and there'll be a spreadsheet and he'll walk everyone through the numbers. So it'll be very informative, high-level content. Be sure to stick around for that. Thank you, everyone, for joining us. For Symon and me, this is Dan saying goodbye.
Goodbye.
All right.